following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome, folks. Tom O'Brien, Darrell Martin. Tom O'Brien, we appreciate you growling and prowling with us out here. Right now, we got the Dow up 99. Nasdaq is flat. S&Ps are up 4. Gold is down $1.20. We have silver down 9 cents. Bonds, the 10-year is off 14 ticks. 30-year, 1.5 points. And, folks, if you haven't test drove the Nadex platform, great time to do it. Come over to our website at TFNN. You can see the banner on the top, on the side. You can hit the banner. Bring the exchange up. They'll put $25,000 of paper money into your account. You'll be able to walk with us through these different contracts. Don't forget, our man, Mr. Darrell Martin, has an outstanding show on every Wednesday, Thursday, 1 to 2 Eastern Standard Time. We do the show every Friday morning, 10 to 11 Eastern Standard Time, as we walk you through these different contracts. And once that you get the account up, folks, come over to our website. Darrell has an outstanding scanner. What the scanner specifically does is that it's hooked into the Nadex platform, number one, but what it will do, it's not going to tell you whether to go long or short. What it is going to do, once you decide what strategy you would like, is going to give you the best contracts in order to trade out that strategy. Darrell Martin, what's going on?
How's it going, man?
Doing great, man. You having a good day out there?
I'm having a great day.
That's a beautiful thing. So,
yeah.
So I think the what I'd like to do out here, let's see where. Yeah, I'm going to go into the Nadex deal. I mean, the Nadex deal. No, I know I'm going to the Nadex deal, but you know what? I do that all the time. The NDX 100.
Going into the U.S. Tech, all right, Nasdaq.
Yeah, that's right. You know,
quite an open.
And it's going to be volatile,
like
man.
happy Friday morning, right?
Yeah,
so, right?
Exactly. And it's going to be volatile in a big way. And we take a look at this baby. Okay, so. Here, let me pull this up first, because this is where my head's going with this thing. So, I guess we got to do this quick. Hey, I love that one we had last week. So
That was
refresh my memory. Which one?
Well, we did.
Oh yeah, we
wrote it
up
down
a little premium.
all the way down to all the way back down.
Yeah,
right. So
that was fantastic.
Yeah,
it was, man. I mean, that was the first time I did that like that.
Taking some premium.
Yeah.
Right.
And,
I know.
And
well, it's because usually you're looking for volatility.
Right, and that what happened there is that it was just set up, because I had looked at it the last couple of days, and that setup wasn't there.
Right. It was a huge day Thursday, and so for it to happen again, maybe it wasn't there. But you collect $5, 5 NASDAQ points, right? 4 or 5 points in premium, plus you got 10 points in value to the downside.
Exactly. And so what happened intraday there, it went up those 5 points.
It was close. No, I know. You had to take a little stress, right?
It was. You know what I mean?
I remember it, because I was watching it.
Intraday, it went up those 5. It actually went up 6 points intraday.
Right.
But even when it went up 6 points, I'm saying to myself, okay, hold it.
Right. You could break even if it just settles right there.
I was a point out of the money. That's it. That was it. So if we look at some of these contracts, so if I look at the NDX 100, let me pull up the NQs first. NQU5. So
if you're trading these spreads, today wouldn't be a good day maybe to be collecting premium. I don't know. It's close.
Well, that's what I want to pull up and see. So my take right now is that, okay, we're at 45.06, right? We have a high volume swing low out here at the 44.89. Yeah. So my take is that that's where we're going to go. You know,
that was a big move on the open down there.
It was. It was
a big move right back, though.
It was. There's no, and we're going to expect that.
Yeah.
The European deal. I mean, that's flat out there right now.
It's intense. It's flat with nothing happening today at all, and just waiting for weekend talks.
Well, you know what they're doing? They're sitting with
this should be good.
They're overlooking the water. They're overlooking the water with a little ouzo, some bread, and some cheese, man, and they're grooving.
It's Friday afternoon over there by now.
Yeah. Okay, so when we take a look at these, so Darrell, let's use the scanner and take a look at what do you think that I think that thing is going down to the lows of today. So what would be my best contract here? Let me see. I'm going to pull up the 80 contract first.
Okay.
We're at 45.02.
And we're close to the center of that.
I'd be looking at the 44.90 by 45.30 contract.
He's looking at the 80, the big one. The 44.70 to 45.50 he had. For the daily.
Okay, yeah. I mean, there's a lot more profit potential in that. You get about 16 points with about 3 points of premium.
Yeah, I mean, that's going all the way down to 44.70. So that's 20 points below that low we just had. Whereas there are.
That's all right.
There in the same way, there's ones where the bottom of that spread's going to be almost right at 44.90. Like Darrell.
I better hurry up as we're talking. I just went down 3 points. Okay, hold it. Where am I? Where's my?
There you go.
Okay. So, if I go, let me pull this up on the other side. Whoops.
We got to get less screens up. I think.
I know. Believe me, I know. 44. Okay. So
that another 100 monitors or so.
Yeah. One or the other, exactly.
So if I sold the 4504, I'd have a max loss of 488, a max profit of 352. That expires, that's the 80.1, all right? And if I'm thinking it's going down there, what is this, where's the other 15? If I take 44.99, oh, that's interesting, isn't it? Look at how that works. So the daily, oh, that's interesting. So max profit 100, max loss of 100, max profit of 200, and that has to go to.
Now you're paying $5 in premium there.
Right.
6. Close.
On which one?
This is now we're looking at the ones where it's the 8 a.m. 30-point spreads, and he has the 44.80 by 45.10. So, we're sitting at 45.05.
Yeah, that's 5. Yeah, 5 solid
but
points.
But you're going to be only able to sell that at about 4,500. Let me just take a look. Now you have 45.10 is the high there. I know because I was looking. If you go back to the daily, there's one that goes 45.10 to 44.70. So it's actually 10 points lower to the downside.
Okay.
Because it's a 40-point spread.
Yeah.
You're paying an extra $1 in premium, it looks like, for those extra 10 points to the downside. I just was curious where.
So just put one so I can see it that way.
One.
Yeah. So there's 106. Oh, look at that. That's interesting, isn't it? So that's why that scan is so important, too. I mean, look at the difference, right?
There's just so many spreads. There are.
Yeah.
At the same, within the same kind, close to that realm of what you're looking for. Where you saw we had, from 44.80 to 45.10, or you have 44.70 to 45.10.
Right.
So they both have the same high point on that spread.
Yeah.
But it's whether you want a 30-point or a 40-point, and are you going to, if you think it has a little bit more volatility, maybe you want to pay that extra point in premium for the 10-point potential downside. That's what you're paying.
Right.
It's sort of basically how do you want to use your capital, and are you willing to take on the extra premium risk, or would you rather collect the premium?
And that probably has to do with what you're expecting for volatility. Like last Friday, you would not have paid that. You were the one collecting it.
It was flattened out.
You were collecting the premium, whereas today it looks like that you're expecting some volatility, so you're going to be the one paying the premium.
And so if I go back to, well, here, let's do this one, because if I go back to, I think I kind of like this one, where I'm risking more, 431.
I mean, that's close. That's going to trade almost at market. You're buying one of those.
Which I like. That's what I want.
Right. Yeah. You're just playing basically a futures play.
I'm just playing a market there. Yeah. That's it. I'm doing that one.
There you go.
Yeah, because what happens there.
That's fine. Yeah, because you can get in trouble when you start. Well, not in trouble, but you're playing some odds if you start collecting or paying premium. I mean, if you start paying premium, the market could just sit where it is, and you lose big time over and over and over.
Right. Oh no, that's why when Darrell was teaching us, explaining the premium.
Collecting.
That's
nice.
why it's wild, Darrell. It's a different feeling, isn't it, when you're collecting the premium?
Yeah.
Right.
It's sort of cool because you feel like you have that massive padding. At the same time, it's like it's moving a little slower.
Yeah.
Like, come on.
Yeah. No, it's very unusual. So picture this, folks, okay? I mean, normally I'm a directional trader. I am a directional trader, there's no doubt.
Normally.
Yeah,
right?
Yeah.
Normally you're a bear.
And I was sitting, I'm sitting at my desk, last Friday after the show. I'm saying, hey, isn't this cool, man? Do you know what I mean? It just felt like the pennies kept coming in my pocket.
They do. When the market's not moving, as long as you're the one collecting, you're collecting that money, right?
And what does happen with these folks, just so you understand, is inside that premium, it all gets crushed by like 1:30, 2 o'clock. 2 o'clock.
Every hour it's getting eaten up.
Yeah.
So, right.
And
you can think to yourself, oh man, there's 2 hours still left. There's a lot. But you've you've offered up that opportunity for 4 hours, 5 hours. So
yes.
that's worth value that you've now collected if it hasn't moved from where you were.
Right. And it seems that if you're doing the fast math on it, it seems that the correlation would be like when you're putting it on. Let's say we put it on now, and if you were collecting premium, like the 2.
I don't know. Do you remember we saw action, I forget whether it was Tuesday or Wednesday, between 4 o'clock and 4:15 alone.
Okay.
There was 10 to 15 points of movement.
You walked in at the office.
So these expire at 4:15. So if that's the kind of volatility you can have after 4 o'clock.
Right.
And that doesn't happen every day, but I'm just illustrating where, there's plenty of volatility left.
Right.
On occasions.
Right.
There is.
Right.
It's 2 o'clock, depending on. And you can see the market now. We're driving down. We were up to 45.16. We're back almost to 4,500. Now we're at 45.05.
Yeah, it's a little crazy market right now.
It is.
Well, you know what's cool out here today? I like a market when it's like this, when you can look at I call it the top line number, because people just watch the Dow all the time, right?
Okay.
And the Dow is up 99, but out of the Dow, half of that move is Nike.
Yeah, I heard you say that. And I hadn't even seen that. I was watching Larry's show before us, and he was just talking about how, Dow's going to be the leader, NASDAQ's the laggard.
Yep.
And that was great because I had some contracts short on the NASDAQs.
Oh, sweet. Well,
then, this is quite a market. So
it is. Well, it's surprising, folks, okay? It's surprising that Nike's not up further. Nike's sales, went up 13%. They beat their number by and then you're talking about a $60 billion. It's such a number.
On a percentage basis,
it's
that's
unbelievable.
Out of control.
Tom O'Brien, Darrell Martin, Tom O'Brien. Our phone number, folks, is 877-927-6648. Give us a call, folks. We're going to be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Tom O'Brien, Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. You can come over to our website, folks. You'll see the banner on the top, on the side. Hit the banner. You can bring up the exchange. They'll put $25,000 of paper money into your account. And, Tom and I, Darrell, we were talking. Well, Tom was talking to me, and he was saying to me, I don't really like what you did there. I know. How did you put it? It's not that he didn't like what I did, but I
don't like the risk reward on on the spread for today. I was just saying that I might not. And what I was saying, Darrell, so I pulled it up, is that he got in, and I'm just going to pull up exactly where we were. We were at 44. Where were we at? Where did you get into? Let me pull it up. Yeah. As in, he was risking $450 to make $350. That's my illustration. So he was giving up $100, and for that, he was collecting about a point or a point and a half in premium.
Right.
And I was just explaining that, if he doesn't consider that point and a half in premium worthwhile, then you shouldn't be willing to risk $450 to make $350, because you're kind of approaching the trade where I'm getting in at market and I'm kind of making a futures play. But you're risking a whole extra $100,
right,
and you only have a potential profit of $350.
Right.
So from a risk reward, unless you're really valuing that premium that you're collecting at that point, don't open yourself up to a $450 risk for a $350 profit unless you're really evaluating that you're collecting premium. And by collecting premium, you better make sure that there's going to be less volatility than the market's pricing into that spread currently.
That's the one counter response I'd have to that is you don't have to hold a spread to expiration.
You don't.
And so you got a couple things. One is you can get out of the trade earlier, but at least you have capped risk.
Sure.
Okay, so you can't, how we've all been guilty of that, moving that stop.
Right, and that's the problem. Where are you approaching it? If you're going to let this ride out during the day, then what I'm saying might have more value. If you're playing with
and then I would.
I know how the trading goes.
I trade. Do you know what I mean?
And that's a perfect point, Darrell. It is. I guess I wasn't even saying it, that I know that we sit here and that might just sit on for the day.
So here, let me ask you this then. This is really cool, man, because this is like pot odds. That's what
it's your risk reward.
What Tom's doing here, folks, is you're taking the two different equations. Okay, I was just looking at the one equation because I'm so used to trading futures. Say, I like that. I think it's going here. Where I wasn't taking the equation that I'm risking another $100. So, Darrell, in that context, right, was there something else that I could have, if I was looking for the same type of action, meaning going down to that level? The real question would be, was that what else could I have traded?
Well, I mean, we have to consider is already it's a good trade. I mean,
So it's not okay.
And on a short-term basis, you can make that, but
I think it's important for all of us to really wrap our head around the math, like we just did.
You have to look at the risk reward.
Right.
Risking $450 to make $350. You're risking $4.50 to make $3.50. You're creeping up to a 3 to 2. I mean, that's how close you are.
Right.
Without a premium edge.
Yeah. I mean, with only 1 point premium in the Nasdaq, you just locked yourself into almost a 3 to 2. I mean, what are the odds? Is it a 5 to? I'm not that quick with my head.
But locked in if you have a standpoint of you're going to sit on it.
Right. Yes. Which these spreads, I mean, I know as we trade them that.
Well, that's how I trade.
That's how it happens.
That's how you trade them. Okay.
Well, what happens is this: is that
the day gets so busy, and it's a perfect way.
It's a couple of different things. It depends on if we get really nice volatility, I mean, one day I just cleaned up beyond belief. I mean, I was long a shot all day long. I don't think we're going to have that type of day out here today. I think it's So I guess my point is that would there have been? Well, we could still find it. Would there be another contract that I could have got into?
You just really want to get right in the center, and when you're 5 points off even, or 8 points off, that's really going to affect your risk reward, and it's going to add some premium on one side of the trade versus the other. So it's finding actually, if you're sitting right at the center, on an 80-point spread, I think we're at 10 points off. We were at 4,500, and the floor was only 4,470.
So I guess the point is that if you're in the center, then the center should be in the money also. 50-50 on each side.
If you're in the center, it's going to be 50-50. When you entered the trade, you had 30 points to the downside and 50 to the upside.
Okay.
And that's where
it could be a problem.
You need to realize that 30 to the downside, you're going short, you're selling that spread.
Right.
They're giving you some premium.
Right.
But in the same regard, you're offering a greater risk reward to collect that premium. So you better value that premium.
How far do you think it's like? I mean, obviously we all feel it can go, all the way down. But how far down do you think it can go?
Well, I'm just going after that high volume swing low at this point. Do you know what I mean? But
well, there are several spreads basically that give you the advantage, the edge on at least premium itself. Okay.
Yeah.
So the spreads I'm looking at are, let's see here, to get the most edge and actually have some profit potential, are going to be the 44.90 to 45.30.
That's the one I just pulled up.
And then also the 44.95 to 45.25 actually gives you more profit potential with lower risk.
How's that? Okay, we're going to walk our heads through this as soon as we come back. Tom O'Brien, Darrell Martin, Tom O'Brien. Dow right now is up 88. Nasdaq's down 4. S&Ps are up 4. We're going to be right back, folks.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom O'Brien, Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. We have the Dow up 99, Nasdaq's off 10. You got the S&Ps up 2.5. And we are talking right now, we're talking about the NDX 100 and the different premiums that are inside some of these contracts.
We have both those spreads up, Darrell, and so we were taking a look at it. But if you want to go through those two spreads that you were just talking about, that's perfect, because those are two good ones, and you can see the difference between a 30-point, a 40-point, where we are.
Right. It's all about, like, what do you want the edge higher price? Do you want the edge premium-wise?
Right.
And, like, basically, how do you want to max out that, profit potential on that spread specifically? So we were talking about 44.95, 45.25 was one of the ones we were looking at?
Yep. Yes.
So, and that one with the market, sitting, what is it, at 44.99.8 right now?
Yes.
So you're able to sell that at 45.05. So that gives you about a 6-point premium on that?
Yeah.
Okay. Maybe 5.6, something like that at the moment. And so that one's pretty good. But there's another one also if you want to get it higher.
And just so you're collecting that premium, though, because you're risking 200 to make 100.
Exactly.
Yeah.
Yeah, and now again, and that's if you're holding no expiration, you're also getting yourself a 5-point edge by selling 5 points higher.
Right.
Sure.
So, and then don't forget, one of the things that I will do often as I trade these is I'll go in and I will use some of that premium that I collect.
Yes.
Like, let's say look at this trade right here, and we go, hey, we got a $45 premium.
Okay.
Right.
Yeah.
So I have some nice profit potential on this trade. It won't eliminate all my risk, but I could take part of that premium, that $40, so I could buy some out of the money binaries to hedge that risk off to equalize my 1-to-1.
Yeah.
That's
right?
so cool.
If you have $45, you go over to okay, I'm going to go ahead and look at these binaries.
Okay.
And if my risk is $200 for $100.
Yeah.
Okay.
Okay.
Then that basically means I can have a 10-point rise at a 1-to-1.
Okay.
Okay. And so I go, okay, well, I want to ideally get about 10 points higher than where the market is right now. It's at 45.01, so ideally somewhere in 45.10. And what could I get for the same expiration if I'm going to leave this thing on all day? And look at that, $39. It's amazing how that premium just matches.
Wow.
And so
if you watch this on Tiger TV, folks, we're bringing this up. Oh, this is so cool, man. Yeah.
The premiums are very perfectly priced.
Yeah.
So I could go in here and I could, if I wanted to establish a, now I am hurting my 1-to-1 a little bit because I'm putting some premium up.
Okay.
But now I no longer have, like maybe a 2-to-1 risk reward.
Yeah.
So
you're not as exposed.
I've got a little bit closer to, a little bit closer to that 1-to-1, 1.25 type thing.
Yeah.
And then I also have opened up a second possibility is, market pops down. I think I got it. I think the move's over. In between the show, I'm looking at I'm going to go take profit on that spread.
That's a huge deal. Yeah.
I've covered all my risk on my binary.
Right.
Okay. I've locked in a profit. Above and beyond what that risk was. And now, if the market does just fly back in reverse, which we've seen that happen several times this week, then I actually have a trade on. You can say in essence, for free. It's real money that's gone. But for my original trade, I'm not putting any additional money up. So I have an additional trade on now. That, hey, if the market does fly back up, then I actually could, bank on that trade too.
Both sides, yeah.
You can see, listen, folks, get that account up, do this paper trade, because that is really intriguing, man.
There's so much strategy that you can...
A $39 profit right now in premium. There's a $40 cost in the 45.10.
Right.
We have it up. Exactly.
Yeah.
Yeah.
So, you're literally talking, because I've looked at these things for all course of other types of trading opportunities,
yes.
And I'm like, man, they're too good at pricing these things.
Yeah.
Because
it all should make sense, right?
Yeah, that premium is very equalized.
Yeah, we are so cool, man. Because if you have a range-bound market that is volatile, which we're kind of in that.
Yeah.
That's a good deal.
Yeah.
Because the bottom line is that when you're at highs or lows, there's going to be a breakout or a breakdown eventually.
Yeah. And we just see them bouncing around.
Right.
It's been good trading in those ranges.
So if you could put on a directional trade, and with that directional trade, you can get closer to that 1-to-1 risk.
Yes.
You're going to leave it on. And, you'll probably take it off, but, I'm not saying necessarily leave to settlement, but, you may not be watching, and then, 3:30, you're like, oh, wow, yeah, this thing's pretty much maxed out. I'm taking it.
Yeah.
Right.
And, then you go, sweet, I have the other trade on. What if it could just be a reversal?
Yeah.
And one of the things I do, too, is even when I put on a trade, if I'm going to leave it on, is I'm still going to put it on for a point or two above that floor.
Okay.
Because, you could walk away. I had a trade on the other day, and I put on Euro dollar. I went short the other night when it dropped like 200 something pips.
Yes.
And I got in about 100 pips into it, and went short some just cheap out of the money binaries before I went to bed.
Yep.
And made this one of my classic stupid mistake. I didn't put my take profit on. Okay. Thing flies down. I would have put it at 20. Flies down. Hits like 18.5.
Really nice. Yeah.
I wake up, the thing's at 50. I'm still up. I had nice gain.
Yeah, but not
And, so I was up about $1,500 on the trade, but I would have been up a lot more on the trade if I just set my take profit. So that's one thing I always recommend, because it made a spike down, and while you're getting coffee, okay?
Yeah.
Oh yeah.
And you come back and it comes all the way back up, and you could have basically maxed out the profit on that trade.
Right.
So always at least a point or two off of it. It's like I tell traders whatever you think your profit goal is, or whatever you think that max profit, at least the max profit potential is.
Yes.
Okay. If I can make $100 on the trade, I'd ideally if you take that thing off and you can get 80, if you can get 80% of the max profit potential, or at least 80% of your profit goal, it's amazing how that we've given up so much money because we wanted that last $20.
No, that's a great mentality when you look at it. Yeah.
And because when you might get that in an hour, you might get it in 20 minutes, you might get it in 4 hours instead of 6. So now your money's out of risk.
Right.
And that's the biggest thing for me is if I'm out of it, I no longer have the risk. And 2, now I have the money free to do another play.
Yeah.
So it's sometimes trying to get that last 5, 10, 20% of the trade, it could cost you literally another, basically doubling what you made on the last trade.
Yeah, and you know what?
I could have made 100 and I wanted 100. But I took 80, and now I can go over and I can make another 80 versus just 20 more.
Right. Would you get into that trade risking 80 to make your final 20? Probably not.
No.
So that's what you have to keep in mind.
Right.
Yeah, that's what I do.
Yeah, I think you brought that up on one show before, and it's really a good point.
I like to look at it like that because it keeps it nice and fresh. And it's really hard when you're in losing positions, the same thing. But that's if you continually ask yourself, would I initiate this trade right here? That's a.
There'd be no way.
Yeah, and so often you'd be like, are you crazy?
Yeah, right.
You'd risk, 9.5 to make 1 for why?
And you're wasting your time.
Right.
You gotta. If you're in front of the machine, it's like, I'm gonna sit here too.
I know.
It's like, oh really?
Yeah.
You could be at the beach, man.
Yeah. Or you could be making a new trade, risking 30 to make 70.
Right.
Versus.
Right.
That's where I've done that before, where I've hopped markets flying, and one it was on binaries. It was just like Nasdaq was just going.
You just jumping binary to binary.
Nice. I would jump a binary because it just kept flying, and I'm like,
this is.
It could make $5 or $10 more, and I'm like, forget it. Man. I think it's still going to go. I'm just going to get other thing. I'm going to go. Instead of putting on more risk, I'm going to take that off and use that same risk, lock in my profit, and now I've lowered my overall risk on the day, and just keep adding in as it keeps going. And then when I do finally get hit, because eventually I'm going to get hit, it's going to be first. I just keep piling on.
Right.
But when it does finally happen, it's like, okay, I gave up the last trade. Not I gave up the all my trades.
Right.
So, and it's a really good mentality. It's like, is this worth being in now?
Right.
Like would I initiate it now? And
would I?
I mean, there's sort of a balance to that mindset because there's no way you're going to put on a trade where, like you were talking about this one trade, you're like, I don't know if I like that because I got that 2-to-1. But I mean, because obviously when you're in profit, you're going to get to that point. But still at the same time, it's like, would it even be like a discussion?
Right.
No, it wouldn't.
You know,
right.
It
wouldn't be a discussion. It'd be like,
right.
That's when it's so clear, right? It's like, oh my, I would never, ever, ever. And then you're like, but I'm still going to wait for the last.
Yeah.
It's like, that makes no sense at all.
I want $10 more.
Right.
You know, and now that just costs you, and especially when you start trading size, that just costs you $1,000.
And that's just, it's so amusing how that mentality, you know, you could sit there, I would never enter this trade in this position, but I'm not going to sell it because I want the last $2. How does that, you know, if you wrap your head around.
If you do.
Yeah.
And you know what's so cool? Because what you guys are talking about is just common sense.
Right.
And if you can bring it, you know, even trading down to common sense, that's when you can understand it more.
Yeah.
I mean,
it's making those rational decisions.
It is.
In the face of, you know, risk reward and money at stake, and it's tough
and pressures
to,
and all of
exactly.
that. Yeah. I mean, so it's a great point, man. It's a huge point. There's no doubt, you know.
Market's trying to break this 44.97 level right now. A little volume spike right there. If we get some break right through that, then
we got action, man. It's a beautiful
Larry
thing.
Pesavento was on earlier. He was saying this is a 382 retracement that we're running into down at that 44.90.
Oh, is it?
So it'll be interesting.
Oh,
yeah.
that's good to know.
I heard him saying that literally.
I like
he does
it.
9 to 10.
44.86 is a 0.5 deviation on the way down.
Yeah, he's talking about it literally down here, and the thing spikes up here. I'm like,
right.
You know, hey,
right.
See what happens.
You know what? It's amazing.
Yeah. I'm watching it right here, and I'm looking at this level, and I'm like, come on, we need some volume. And to try to see if this volume will exceed. See how we got that volume spike at 10:30?
Well, you know,
I mean, it wasn't massive, but it just higher volume compared to, you know, the rest of the day. So
that's right. Well, you know, the bottom line is that, you know, who wants to go, Tom had said to me at the commercial break, who wants to go along, you know, when the Europeans are talking about Greece? And I said, well, you know, guess what? There's no doubt. The Greeks aren't worrying about it. They're sitting having ouzo with their cheese and their bread.
What do they have to be?
I tell you, Greece is becoming one of my favorite countries.
Oh, I heard it's gorgeous, man.
I made so much money off Greece. Greece is, I mean, if they just keep playing their game, and it's fantastic. So.
I said, what do they have on Greece to force them to budge? It's a tough negotiation, man.
Right. I mean, they have nothing to lose.
That's what I don't know how you sit down and what is your counter when they say no?
Like,
you know,
if they just say no, like you, like
what do you say?
Yeah. Yeah. Right.
Well, what about yes?
Okay, we're gonna go ahead and go back, and we're gonna go sit on the beach, and when y'all figure it out, y'all come on back.
I know, because this is what we want, and you know, that's what we want, and that's where we're gonna go.
You know, it's amazing. I had said you know, my take is that they have a huge amount of money stashed anyway. Okay, you know, all the Greek citizens, and if you've ever, I've done a lot of business with Greeks. My first mentor, to this day, one of my great friends, it's a whole Greek family. And they're so smart, it's unbelievable. They're great business people. So every time I look at it, there's a total disconnect. It's like, hold it, what are you talking about, okay? You know, so, I mean, we're not there, so I really don't know what's going on. But you can't go to any Greek community in the United States that they don't make money hand over fist, and their work is beyond belief. Do you know what I mean?
Yeah.
So when I look at it, I'm saying to myself, you know what? They're just going to tell these people to see you later, man. You know, because when the Germans say, oh, you're going to be wandering in the desert or something, you know, it's not going to happen.
Right.
You know, they got a great country.
As long as, I think at least Greece is playing their hand like that that's what they believe in.
Yeah.
You know, so and that's really all that matters, whether that's what they think or not. And if that's what they think, then
perception is reality.
Yeah, exactly. If that's what they think, then they have no reason to budge. So
yeah, and the Germans, the Deutsche Bank their perception is, man, if they go south, Deutsche Bank is the one that's going to get hit beyond belief.
Yeah.
And what we don't know, though, and this is where the contagion comes, you don't know who Deutsche Bank sold all that debt to,
and I'm sure they've been trying to cover themselves.
Oh, for sure.
You know,
they've had years.
They aren't as exposed as they probably were when this thing began, but
yeah,
there's a lot of exposure, that's for sure.
Let's go look. I'm going to pull this NDX up for a sec because I want to see what inside that NDX.
Who's doing what?
Yeah, well, you got Micron's the big number. Oh, see, Micron's down $4.30, but Intel's a big number out of that. Intel's down 78 right now, and that has a large weighting structure. That's not the end of the world for that. 70.
That has some resistance right there,
It does.
too.
It does. Yahoo. Oh, there it is. Coming up the rear, though, you know what it is? Netflix is the one that can take it apart. Netflix, that was down $20 yesterday. We got it down 9 right now, and she wants to. Well, we'll see if she can break down. She's going after a swing low right now.
It's interesting how you could have said they do a 7 for 1, it runs up, and then what? It's going to pull back, right?
Yeah.
I mean, it's like
exactly. If we go over and we take a look, NQU5. And let's see how she broke. Oh, it says this is going to be interesting how she comes into it. So what we're going after that high volume swing low. And she's coming into it right now. And so she's going to need some real juice. Now, what I'd love to see, so the high volume swing low, folks, is at 89. And we're at 93 right now. Oh, man, it's an ABC down. Check this out. Hold it. Oh, I didn't see this. Look at this. So your A point on this is yesterday at 39, 45.39. And just conservatively, I bring it to 99. So it's 30 what did I say? It's $40. That would bring you to 85. Oh, and that's 89. Interesting. Yeah.
A lot of quick math you did there.
Right.
Yeah, I got you. I did.
Right.
Yeah.
Yeah, that's so that'd be interesting to see what happens. Now, what's really cool is that what you just said about Larry too. You know that's a what was that?
0.382.
That's a 0.382. So the A to B equals C to D is 85. You know, so we'll see what happens when you get down to those levels, man.
Yeah.
You know, and you can more than likely expect a bounce out of those levels. Now, if we match that up with,
if we do get that bounce, does that mean that we're going to see Nasdaq bounce?
Well, more than likely, if the way I would look at it, if it comes into that with dramatically lighter volume, I'd say, yeah. Do you know what I mean?
So if we go look at, obviously that's the Qs. They move similar. And so what are we looking at? And I know you mentioned Pesavento was talking about a level this morning.
That the 89 was the 0.382.
Yeah, it was like that 44.90 was a 382 retracement of a recent run up, and I'm just, he had it up on his charts, and I'm not sure where he started, but it was a pretty simple, just 0.382 retracement. Probably maybe from that most recent rise up from. Looks like just looking at it visually.
That
from
the thing of strength,
like the last
exactly.
2 weeks, or.
Tom O'Brien, Darrell Martin, Tom O'Brien, appreciate you growling and prowling with us. You stay right there, folks. We'll be coming right back. Dow's up 90, Nasdaq's down 17, S&Ps are up $1.50. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Tom O'Brien, Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. You get the Dow up 87, Nasdaq's down 17, S&Ps are flat. And, hey, Darrell, now we've been talking about, okay, how much you're going to risk versus the reward. If we look at the trade that we put on when we started the program, it's getting kind of interesting here because, now, the trade's up $100, $104, right? So now I'm actually...
And just to walk through, so you had risked $450 for potential loss to make $350.
Right.
You've made $100, so now you're pretty much risking $550 with a potential profit for $250.
Right.
So we were just walking through, Dale, the same thing we were saying, where would you be placing a trade right now at these lows?
And it's come down to the point that I thought it was going to come to.
Right. That's
the high volume low. Right.
That $550 to make $250, and that's, you look at it so differently as opposed to saying, I have a great trade on and I'm up $100. All right, let's go. Let's be up $200.
Yeah,
and it's not. It's,
Right.
So what you're gonna see how this trades out at these lower levels? I mean, it is interesting when we come down to these same levels, just like that's obviously, and you can see we're close. 45.90. I mean, we're right there.
I'm gonna look.
We're on the we're on that level.
We're right
on the cusp, baby.
Yeah. You can just see how it plays out, maybe, and if it starts to spike, maybe take some profits and sell the contract. Or
what you got to do though is you got to decide before, because all of a sudden when that profit starts evaporating, it's really easy to freeze until it comes back.
Right. Yeah.
So you got to go, okay, when this happens, what am I going to do without regret?
Right. Now, so I'll show you then. Okay,
so you're like, okay, when it spikes up, I'm going to take, wait a minute, because you forget, like, oh yeah, there's going to be $100 left.
So this is, yeah, I'll show you what I do. Even though I'm trading the NASDAQ, folks, okay, what I end up doing is this. No matter what future I'm trading, I always look at the NASDAQ futures and the S&P futures, okay? So, in the S&Ps, it's not down there yet, and it's light volume. It's okay. So, to me, the S&Ps, that still wants to spike, okay? So, that low of 2090. So, I take that into consideration. Then I go over, and we got to look at the actual contract, okay? So, when I'm looking at the contract, I'm saying to myself, okay, how did we hit here the first time? And what I'm looking for is that I'm looking for, well, there it is. I got a slight expansion, not a lot, okay? But I got 4,400 contracts coming into it. Now, you need a lot more, because we're talking about 8,800 contracts. Now, that, to me, we know, what do we know? We know that the A to B equals C to D is 85.
Yep.
So I'm going to leave it there to see, okay, at 85 what happens. You know what I mean? But that's kind of, and what's intriguing here, folks, I know we're going fast, but when you do this for a while, it's, what I've done is this. When I'm just mentioning the last two numbers, that's what I've always kind of done in my head On the air,
I know.
no.
I know it's in your head.
Right. On the air, it's different. I have to bring them all out. But if you're trading, you try to make the math as easy as you can.
I think we went through it, and this is, it's just those risk rewards, the premium, with the volatility being priced in, where your premium is in relation to your risk reward, how big the spreads are, and this is why, we've said that we all started with start small, whether you get up, the demo account, or you're just starting completely small.
Right.
And I know I heard you talking about, Darrell, all you traded was spreads for the first 9 months or something like that.
Yeah, that's all I traded at. People try to hop between so many different strategies and different things, and I sat down and I'm like, okay, I can read a chart.
Yeah.
I had a good understanding of options, but even if you don't, if you can read a chart, if you can read a chart for futures or forex, or you understand options,
sure,
the spreads are just really natural.
Yeah, they are.
And then, now the binaries, they're a whole different animal because they're like the delta of a call option.
Right.
We're going, man. We're rocking right now.
It's a beautiful thing.
It's a great way to end.
up about almost $2,000 right now.
There's that 85. Let's see what happens.
Darrell, it's a beautiful thing. We love doing this program, man.
We'll see.
Thanks so much, brother.
Keep it up. Thank you.
All right.
Nice time.
Thanks, man.
Great one. Thanks, folks. You stay right there, man. Basil Chapman's coming up, growling and prowling with you. Have a great one, folks. Have a safe one. Basil's coming right up.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.